So I'm just going to do a quick breakdown, boys, of today's trade. Why we were looking for buys instead of sells after a big bearish push down. Why we were entering where we were entering. And why we were aiming for what we were aiming for, basically. So essentially, if we look at the daily time frame first, we can see that today's candle has swept yesterday's lows completely. The wick of our candle is down here. It's a bit hard to see because of the markings up. And we reacted out of a 5-minute inverse FVG and obviously respected it very well. If we then drop to the 15-minute, our initial draw liquidity was marked up here, and then we've got another 15-minute draw liquidity marked up here. So obviously that would be our targets after seeing a respect of this FVG. What confirms that we're having a respect of this FVG to aim for those liquidity points is the following. So obviously, like I said, the 5-minute draw liquidity matched up with the 15-minute draw liquidity, and then there's obviously the 15, which was up here as well, which obviously could be a target of 95, 96, whatever, but we aimed for 85 because it was an 86 because it was a good RR. But the confirmation that we had that this was going to be a change in state delivery was exactly that, a change in state delivery. We had a 5-minute change in state, we've had a 15-minute change in state delivery as well here. And then not only have we had the change in state delivery, we've actually left an inverse fair value gap behind, which sits in here, which we tapped. Unfortunately, we missed this entry by like a minute or 30 seconds, which is a bit of a bastard, but it is what it is. But then taking this high confirms that we have had a change of state delivery. We're respecting this inverse fair value gap, and now we could be looking for buys instead of sells and targeting number one, the first 15-minute draw liquidity and the 5-minute draw liquidity, and number two, then if you wanted to leave it run to Asia highs, a bit riskier. But that's the other 15-minute draw liquidity. Obviously, like I said, we targeted here, and as you can see, we smashed TP. But this is why we entered the buy. So like I said, we've had the change of state delivery, we've had an inverse fair value gap, which we respected, we've taken out previous liquidity, and now we're moving to the high side, which means we were looking for inverse fair value gaps or fair value gaps to respect. And like here, we've had a fair value gap on the 5-minute, which is respected, come back down, respected it again, but in doing that, it's also left another 5-minute draw FEG, which it respected the second time, made new structure, reacted off this 5-minute bearish, but again, just come back down to tap that inverse, which I know a lot of you got your entries off there. Regardless of whether it's respected this and then that, the momentum is bullish. We're aiming for that draw liquidity to the high side up here, so we're still looking for buys. I know a lot of you then got your entry based off this tap of the inverse, and you rolled it up to a 3RR. And then my entry, because I missed that one, was based off the following. Again, I was still looking for buys because we were in a bullish momentum, and the liquidity was sat above. So my entry was actually here, and the reason for my entry was obviously I missed this one previously, which you boys took it the 3RR from. But they did leave behind a 1-minute fair value gap here, and again, because I knew we were aiming for that draw liquidity to the high side, because I knew we were in a bullish trend, bullish structure, that this probably would hold. I know I said on the call that my stops should probably be below the wick, but to be fair, I think I did get it right with the stops below the first of the power of 3 candle. So stops below this candle here, and obviously as we can see, I managed to stay in the trade and ride it up to a 3.74 RR, which passed me the 5 account, which is brilliant. So that is just a quick breakdown of today's trade. Draw liquidity was sat at here, like I said. So ideally, my trade, if I hadn't passed the 5 account, I probably would have held it to a 5 RR, which we would have hit TP on. But I only needed that 3.7 to pass the account, which played out perfectly for me. But yeah, that's it. We just basically had a higher time frame on the daily sweep of yesterday's lows. We had a 15-minute. Let me get back to you. So here's yesterday's sweep. But here, respected a 5-minute inverse FEG, reacted from it, and then we've had the change of state delivery on the 5 and the 15, inverse fair value gap, and we respected it. So now we got our left side curve, and now we're looking for our right side curve. So that was essentially it, and then obviously entries were based off whether they had a normal FEG on the 5 minute or the 1 minute, or whether there was an inverse FEG on the 5 minute or the 1 minute to ride it up to that liquidity area here. But yeah, that's the breakdown really, boys. Just had a sweep of higher time frame liquidity, a respect of a fair value gap, a change of state delivery on the 5 and the 15, an inverse fair value gap which we respected, and then it was just basically getting our entries to ride it to the draw liquidity above.